Hey James, I invited you to co-host. Just accept the invitation.
Got it. Just accepted that.
Welcome everyone. We're very excited for this. We're gonna wait for the speaker, the guest speaker, Monty, and then we will start around 12 and maybe 12 in a couple of minutes. Thank you so much for joining.
Yeah, and just a quick note that we've uploaded a number of episodes of ENS Academy on iTunes and Spotify. So now you can listen to them on your favorite podcasting app uh, whenever you're free at the gym, while driving, on a run. And we're going to eventually upload all of them to those platforms.
Hey James, I sent a link to Monty. If you have him by text, if you text him, can you please just text him? Oh, here he is. Well, there he is. Perfect. Hey Monty, if you can hear me, I sent you a request to speak. You just have to accept it and it'll pull you up to the panel. Perfect. Hey Monty, how are you?
I'm doing great. How are you? Can you hear me?
Very good. Yes, we can hear you. We're very, very excited to have you here. Thank you so much for joining us.
Oh, it's my pleasure, and thank you for inviting me.
Yeah, so what we're gonna do is just wait one more minute and then I'm going to start with the intro and hand it over to James. We have questions prepared, and then at the end we will open a 15-minute time window for Q&A from the community. So yeah, we'll just start in 1 minute.
All right, sounds great. Thank you.
And for the audience, please retweet this space so that more people can join and benefit from this episode. And yeah, I'm gonna start now. Welcome everyone. Welcome to another episode with ENS Academy. Our mission as ENS Academy is to accelerate the adoption of ENS worldwide. We bring ENS experts and entrepreneurs to share their knowledge with the global community. Our goal is to educate, support, and empower anyone who can benefit from this technology. Today we have Monty Khan with us. He is the president of RightOffTheDot.com. He made $560 million in domains sold live and online. He I pinned his bio to the pinned tweet. He partnered with to create .hip hop. Check that out, get .hip hop, and it's a really cool website. I enjoyed surfing it, and he's here with us today to give us insights and help us gather from the patterns and experiences he had in the domain industry. And yeah, and with that, I'm going to hand it over to James.
Hey, thanks so much for the intro. I'm super excited to have Monty here. As everyone knows, sales is tough. So now imagine sales in a new industry that's on a whole nother level. I think what we're going to learn today is going to be really applicable going forward for the whole industry because without sales, you don't have an industry. So to kick this off, Monty, could you tell us the story of how did you get into selling domain names in the 90s? I mean, it was like at the like the industry itself was in its infancy in the 90s. How did that happen?
That's a great question because that's one of the most unique things about the story. I was in the medical business before then. I went to school and college to be in the biomedical industry and ended up selling capital equipment to hospitals and to doctors' offices. And one of my clients, which was the head of pharmacy for the largest hospital systems in Florida, which was called Florida Hospital, um, we had a really good relationship. I was selling inventory management systems and healthcare systems to hospitals, and one of the areas that we had direct impact on was inventory management and um, uh, just in time storage of medical supplies and pharmaceuticals. And so I made a big impact on his business, and we became friends. And he had a son that wrote a thesis paper back in 1994, 1995 that just uh, uh, was in the theory of how domain names as physical real estate are like um, um, virtual real estate, like a digital real estate play. And they asked me to read the thesis paper. And for some reason, after I read the thesis paper, I was like totally hooked. I got the concept of how there was virtual real estate about to take off in the industry. And this is way before the internet was even popular. Again, this is 1994, 1995. There was no Google, there was no Yahoo. We had Netscape as a browser. You were connecting to the internet on baud modems through your telephone lines. There was no banner advertising. It was simply a real estate play at the time. So buying a piece of virtual real estate, which ironically we're kind of looking at NFTs that way now with art. But back in 1994, this was what the NFT was as it is today. And I got so hooked on it and enthralled about the idea that I did my research, found out how to go and register names. At that time, it was only through Network Solutions, and it was a paper process. You had to mail in your application for each domain name after you did a search to see if it was available. And I ended up with over 2 years, about 2,000 domain names. And so I started investing in these domain names in 1995. I started registering them, and I would do that at night, in the middle of the night, in the wee hours after I was doing my full-time job, traveling, selling medical equipment. And after a couple thousand domain names at the time, at $75 a piece was the cost of it back then. You had a minimum of 2-year registration, and Network Solutions was the only channel to go through. That was the monopoly that was dictated by the government on how to register a domain name and where to go. I was thinking to myself, how can I monetize this? If it's like real estate, you got to try to sell it, I guess, because at the time you couldn't sell traffic. There was no parking. There was no SEO. There was no SEM. There was nothing else. It was just simply buying and selling the virtual real estate as if you would for, physical real estate. So I was probably one of 100 people in the world that, started registering these names at the time, I would think. Um, and so I came up with a landing page idea to just list the names on the landing page. Just come up with a landing page, list the names on the landing page with links of each domain name and an email form that would just put in, that people would put in their email address, say, I'm interested in this name or whatever. And I partnered with a server company, a hosting company in Florida, in Orlando at the time. And they dedicated, part of a server to me. And back then, servers aren't what they are today. And as soon as we turn on the switch and I put all the DNS on this one page, I brought down the server because of the amount of type-in traffic there was. Now, ironically, because there was no search engines back then, everybody was direct typing in where they wanted to go on the internet. And so they would type in the names and the URL. And so that drove the traffic. And so that was like an anomaly. So I'm like, wait a minute, this is getting all kinds of traffic. We just brought down part of a server. So then they dedicated a whole server. Same thing happened. The whole server went down. Then they dedicated like 4 servers, brought down all 4 servers again. And then I ended up getting like 6 or 7 servers, and it finally stabilized itself. And I ended up selling 16 names my first year after putting up that site, and it paid for all of my renewals. So then I was on to something. So I made $160,000 back, and it cost me $140,000 about to register all of them. And so the next year, the same thing. I sold another probably 25 names or something, and I made a couple $100,000 selling those names. Again, just getting an idea how to price them, trying to get my money back, trying to make sure that the money that was generated was more than what the renewal costs were. And then I started doing some research to find out who else owned names like me. So to see if anybody else was doing what I was doing. So nobody was doing what I was doing. And then I decided to go approach all those people, or as many as I could, that had just as good a names as I had, or better names. And then I got them to list their names on the site as well. And long story short, and to speed up things, I ended up selling wallstreet.com in 1999 for $1.1 million. That was the first $1 million sale in the industry. And then that same year, we sold autos.com for $2.2 million. I quit my job in the medical business and started what became back then as moniker.com. And many of you probably remember that name. And that was our domain registrar and monetization company and brokerage and sales company. And we turned the moniker into a domain monetization and asset management company because I always looked at the domain names as assets and digital assets or virtual assets, just like real estate. And so that's kind of the way it got started.
Great story, Monty. When you look at those early buyers, how would you classify them? Were they, investors, speculators, corporations, or like a mix?
No, back then it was all end users and buyers who kind of saw the vision of having an online identity back then. And again, now I'm using the assimilation of what's going on now with NFTs and people getting into the metaverse, these companies that now feel like they need to be on the metaverse. So back then, obviously, everybody was brick and mortar, and the internet was, the big thing. So it was mostly end users. It was mostly corporate buyers buying the domain names at the time. Hardly any flippers, because now again, this is the mid 90s, not the late 90s, early 2000, when we got into the speculators, the domain investors, domainers, all this. So I'm talking about the period between 1995 and probably 1999. Most were corporate and end user buyers who needed their identity and wanting to get on the web.
So if you were to take a time travel machine back into that time period, the 90s, would the best strategy have been just to hold on to names longer, or would it have made sense to sell and use those profits to reinvest for growth?
So that's another great question, because sometimes I kick myself that I didn't register more names. I made a very hard, but I think smart decision for me anyway. And that was, I could have kept on registering domain names and holding them. But as everybody knows, there was the .com bust, the boom and bust period. So there was a point in time where people didn't think the internet was going to survive. And that was in 1999 and 2000. So selling those names early on and funding the capital investment made in order to register those names in the beginning, I think was the right decision. Because I didn't sell all my names. I sold, a fraction of them to make back the money, and I held on to other names. And then I applied that philosophy to other guys who are, buying virtual real estate or domain names at the time. And it worked out for them as well. And, as we go through these industry peaks and valleys in investment, if you were to hold on to all the real estate and never sell it, then you'd never be able to monetize it and reinvest into other things and do what you needed to do. That's why real estate over time is proven to be more valuable over time, is because there's a transaction between a buyer and a seller over some period of time. Most people don't hold on to real estate forever because you can never monetize it. And at some point, it becomes, you can monetize it if you build something on it, obviously, a website, and you're monetizing it. Or in the case of physical real estate, an apartment building, an office building, a house, whatever, that you're going to resell or something. But at the time, again, infrastructure, domain, website building was very archaic, is very hard to do. So we're just talking about raw land, raw real estate at the time. So, I, in hindsight, I should have, we should have registered a lot more names. But then as I was getting into the business of serving others, taking my model and then using, and then taking other customers and putting them on my platform, I felt a ethical obligation not to compete with them and try to register names that they might have registered. And that's what Moniker was all about at the time. We were like the domainer investment platform. Even though we had a lot of intelligence on registering names that were dropping, we were one of the first companies to go after names that expired and dropped. And we got into that game a little bit. And then we actually had something called Traffic Club that monetized multiple platforms between Yahoo and Google and sex search and a bunch of platforms to monetize traffic. Our philosophy was, let's not compete with our customers. Let's provide products and services that help them be successful, and then they'll keep reinvesting in the business, and that will grow our company over time. And so that's the decision I made.
Monty, an interesting question. When you think back to the 90s and the domainers that you knew that were early, I call anyone who was in the 90s a pioneer in the industry. How would you describe those people? Like, would you say they're just very curious people? Would you say they have a vision? Would you say they think differently? How would you describe those people?
I would say a combination of all that, all above. I saw the vision. I had the vision of it, even though it wasn't my forte at the time. I wasn't a computer person or a geeky person at all. I was a pure salesperson. I was an entrepreneur and a salesperson, but I saw the vision of what domain names could be in the future, not knowing, of course, not ever predicting that there would be a Google or a Yahoo or a Facebook or anything like that. But just that if I just looked at it as a pure real estate grab, and given how real estate's been around for 5,000 to 7,000 years and how it's evolved over time, I looked at it as a virtual real estate grab, and so I saw the vision of that. I would say that the Rick Schwartz of the world and the Michael Birkins of the world and Frank Schillings of the world saw that similar play, that they were investing in real estate, a virtual real estate play, and that their names would be more valuable over time, and that's how they could monetize it. A lot of the people online early were kind of introverted and to themselves. They weren't very, social. They weren't out in the open that much. They felt they had something private, and so the original boards and communication boards that we were on, it was very, it was very interesting to communicate with some of the people that started in the domain name business early. I was more of a, social person and out in the open, but a lot of people were pretty closed and, kept in themselves. So it's a combination of people in the beginning.
Monty, where did those early pioneers get the capital? I mean, I've read, some early pioneers had thousands of domain names. Where did the capital come from?
Well, in my case, the capital came from my generation of sales in my medical business and my other investments. And I redirected that investment into the domain names as if I was buying stocks or other physical real estate. So I used a portion of my earnings to be in the domain name business. I would say that everybody else did the same thing at the time. I remember Frank Schilling's story is, he leveraged every credit card he had and bought domain names. He didn't get into the late 90s. So he used credit cards and leveraged his credit cards and debt in order to get into the business. I used money I made to get into the business. I would say Rick Schwartz was a fairly successful guy in the furniture business and in real estate to begin with, and he used those funds. A lot of the guys came over from the phone line industry, from the 1-800 and 1-900 business, which also has a similar aspect to domain names. If you think about it, back then, all the vanity numbers, the 800 buy cars, the 900, chat telephone numbers, the vanity numbers, they're very similar to the domain name business. So a lot of the original guys that got into the business were in the telephone business. We have that they own telephone numbers. And so they saw a telephone number as a unique identity that spells out a call to action, like 1-800 buy cars, or 1-900 doctors, or some of the adult chat sites or whatever. And so each number was unique and each domain name was unique. So they saw that as a similar play. So that's how they got into the business.
Great stories, Monty. Was it clear right from the beginning that it would be that .com would be king? I mean, why couldn't it have been .net, for instance?
Well, as definition by before ICANN, but by the United States government, com stands for commercial. So commercial meant for profit at the time. So if you were a commercial business, you were for profit. Net stood for network, and org stood for organization. So there was only 5 extensions in the very beginning. There was MIL for the military. There's .edu for the education sector, and that was restricted, so no one could just go and register those. And the 3 open registration domain names at the time, excluding country codes, were .com, .net, and .org. So if you were a for-profit business, it was just natural to go to .com. However, ironically, no one knew that com stood for commercial. People mistaken it for community, commerce, communication. They didn't know what it stood for. So it was a shortener for commercial. Network was kind of obvious, for network. Again, they were shorteners, and org for organization. The original concept by the government is that the .org extension would be used for nonprofits, and you would have to prove that you're a nonprofit, but there was no way to prove that at the time. So they left it open. And of course you could generate profit on all 3 of those extensions. It's just that .com became the international symbol for for-profit internet sites. And that's why it took off the way it did.
Monty, a lot of people in ENS are eagerly awaiting the first publicly disclosed 7-figure sale for a .eth asset. How did you get those first 7-figure sales in the industry for .com?
So the first 7-figure sale was wallstreet.com. So that was not a name I owned, but a name that we seeked out as a broker or as an auctioneer to go after, because we knew that it would be a valuable asset for the general worldwide community. The domain name happened to be owned by 4 partners. 2 of them were stockbrokers. 2 of them were just buddies. It was four guys that were friends, and they weren't really using the site. They got it the same way I got some of my domain names. They just registered it, and then they didn't know what to do with it. And so we convinced them to sell it, and we held an online email auction. And I use the same thing I do today, and we're reaching out to end user buyers through telephone, picking up the phone and talking to them, and positioning why that brand and why that identity would be important to them, and also email communication. And we held an email silent bid auction for that domain name. So in the beginning, and as I still try to do today, is we focus on keyword domain names that have intrinsic value and keyword value and search engine value, traffic type, natural type in traffic value. And the way to generate a 7-figure sale is to have, a buyer on the other end that's willing to pay that amount. So there's 2 ways to do it. You can find one buyer that says, okay, I'll buy the name and I have a lot of money and I'm going to buy the name for the price that you say it's at. Or it's done through competition, through a bidding system, which is why I do auctions. And that is that the market can drive the sale price by more than one bidder saying that the domain name is worth more to them than it would be just sitting out there by itself. And so that's why auctions are successful, because it drives value through market making prices based off of the people that are participating in the auction to say it's worth this amount of money. And so when I focused on those names, I focused on what I would think were 6, 7 figure names. And I went out and seeked the potential buyers for those. And before the .com bust, obviously a lot of people were raising money and they were flush with cash. So it was a little bit easier. Then when the .com bust happened, it was a little bit harder. But then after that settled down, then it became a little bit easier to get some of those 7 figure sales. And, to date, we've generated $565 million worth of domain sales for our clients, through the last, 25 years as a result of creating online auctions, doing end user brokerage, building use case scenarios and why it's important to have your identity. And, that once you make that initial investment, it's probably the best thing. When you look back 5 years from now, you'll say, thank God I got that name because of what it meant and means to your company.
The thing that I'm having a hard time getting my mind around is in those early days, how could companies justify spending millions of dollars when there were like 100, 200 million, 300 million internet users? How did that happen?
It was even less than that in the beginning. The same way it's happening now with NFTs and getting into the metaverse. So there's very few users in the metaverse. There's very few people, in general with NFTs. Yet you see NFTs, the Bored Apes, and you see the metaverse plays, the real estate plays in the metaverse selling for, hundreds of thousands of dollars right now to take apart and get your initial stake in the ground. So there's a lot of inertia and fear of loss, fear of missing out, FOMO, that takes place with it. There's competition. There's having first mover advantage that takes a place in it. Protecting your brand, protecting your identity, generating interest through future products and services and business development and inventions and those types of things. And so that's how it was done in the past. And so, a lot of those companies we sold domain names to, they became very famous brands and identities as a result of that.
Great points, Monty. And continuing with that thread, would you say that it was just a gradual process, that there was no like one day where, okay, all of a sudden sales are happening? It was just every year, more sales, just a continuing growth.
It was until the first, .com boom and bust. So, again, the big transactions happened right before that happened because there's the boom. So there was all that excitement, the boom, similar to what's happened right now before this recession. With the real estate grab, how real estate's gone crazy. And now we've gotten into this recession, and now real estate's going to take a little step back because of interest rate hikes and testing the financial environment. But once the internet proved out to be, to exist through all that stuff, then, gradually it grew over time and became more confident. And that then not being on the web, not having your identity, not having a brand, not having a web presence, not being able to use email or, with your domain name at the end to give your brand, became like you were out of sync with society or with the worldwide economy. And so, ironically, there's still almost 45% of the world that's still not online yet. That's still not connected to the internet. So, that's why there's huge growth to come, even in today's world where we think it's all saturated. It's really not. There's so much more growth to come.
Great points. I mean, when you take a step back and look at the big picture, I mean, 45% is a lot. I mean, that's billions and billions of people.
Billions of people, billions of like Africa, for example, is 20% penetrated on the internet. Imagine, what that'll be in 10 years or 20 years. Even Asia, has still got tons of growth. India, tons of growth. And as the population increases, the need for identity and online presence is going to increase no matter what. So people have to be able to communicate. There will be emails, there will be websites, there will be online identities and brands. And so the need for domain names and the right identity in all kinds of extensions, both blockchain extensions and traditional Web2 extensions, will increase over time And when the tidewater raises for one, it raises for all. So, it will help the worldwide internet community, whether you're a blockchain domain owner or a Web2 domain owner or both or all three or whatever's coming next and NFTs. This all helps the global internet economy and blockchain economy as a whole over time.
Monty, a question on what makes for a successful sales process, right? Like, is it, generally speaking, is it, more grit? Is it understanding the market? Is it having the connections, or like all of the above?
It's all the above. One thing that was a big advantage to me is in the medical business is I went through what was called a consultative selling training class. And because when you're selling big, expensive systems or equipment, you don't vend those. You don't sit at a flea market and try to sell those. You have to develop a use case. You have to do a needs analysis. You have to find out why somebody would need a particular product or service and why they would have to spend a lot of money to do it. You have to do return on investment and IRR analysis. You go through, a process of explaining and positioning an asset like this to an end user on why it's important they own it, and try to ask the right questions and have them ask themselves the right questions on why they would need it. And that's how those types of sales are generated. You don't sell $1 million names by vending or, just contacting somebody through email saying, hey, I got this name for sale at 7 figures. You have to find out who your target buyers are, how well they're funded, why they need it, what domain names they're using currently, why it makes sense to have a better name, what that online presence can give them, how much natural search engine traffic they can get by having a natural type in a domain name or a search term that they're paying money for advertising online through PPC or CPC, and how that can help them save money. So it's a drawn out process, but it's something that we've been doing for a long time. So it's more natural, but it's still not an easy sales. Those types of sales take time to do. So so it takes grit, it takes determination, it takes tenacity, it takes listening skills, it takes handling rejection and trying to reposition yourself, and all that stuff combined.
Well, I think a lot of people are introverts, and it's hard for them to say pick up the phone and make a call for a sale. Like, how important is using the phone for domain sales?
It's very important, and that's why companies like mine or me are the people to use for that, because I have no problem picking up the phone or positioning the domain name for sale. That's what I do for a living. That's what I did when in my whole entire career with capital equipment sales. So a lot of people aren't comfortable with it. They don't know how to position it, but that's why you hire a specialist that does that. That's why you have professional brokers and real estate agents and consultants that do some of those things for you when you're not comfortable doing it yourself. Because it does take a talent. It does take, there's risk behind it. There's, if you're not completely comfortable in that chair, it's hard to do it. And it's not an easy thing to learn either. You're either some of it comes naturally. I think as my dad was a great salesperson, I was born with some of it. But a lot of the people in the business that are brokers and they've been doing it for years, and they've learned their technique over time, and it takes a lot of skill.
Yeah, I totally agree with you. And that's why there are all these industries with brokers, right? Like real estate brokers and uh, on and on. And I think what happens sometimes is people are very good at buying assets. Like they have, they're like truffle sniffers, right? Like they have that knack, that uncanny intuition of acquiring undervalued assets. But then they think, oh, well, I can also sell it myself, and they really struggle with it, and they realize it's like trying to put a square peg in a round hole. um, and so I think that being honest with yourself about your strengths and your weaknesses is really important.
Oh yeah, for sure. And of course there's that medium play, which is, I can list it on these platforms, and obviously that works too. but you never have that interaction with the buyer that might be able to drive the price up, or to find out whether it really makes sense. I mean, you have the sniffers, like you're saying, the truffle sniffers on the buying side, even that will come and sniff the name out, and they'll try to get it for the cheapest price. And they may or may not be an investor. They may or may not be an end user. But then you can lose the upside on that sometimes. And even with the broker involved, we tend, when I was with Moniker, we got between 20 and 30% over what the expectations were for our sellers, because we were involved, and that's including our commission. So when you have somebody interacting in the transaction themselves, from the very beginning, the value generally is higher because of that, and the prices that's paid is significantly higher because of that. And then I use that same philosophy in our auctions as well, because I don't just put up a bunch of names and let them sit up there for auction and hope my buyers come. I'm obviously out marketing. We are, as a company, marketing to end users and buyers. And of course, domain investors are there buying as well. So they get to play in the market as well. So there's something for everybody. But you can't just put up something for auction and not expect great results if you're not out there hustling and making sure that the right end user sees value in what's being offered for sale at the time of sale.
Yeah, I totally agree. And I think we'll see the same thing in ENS, that really, if you want the best sales price, you're going to need someone on your behalf out there making it happen. It's not just going to sell itself through an online platform.
It could, but but I do feel, just from experience, that you'll miss out on a lot of upside because of that transact. Just having it sit out there and having having an automated process handle it is not as good as having someone out there handling it for you.
Yeah, and adding to that, it's just common sense that 99% of potential buyers, in terms of end users, corporations, are likely not going to know of these online platforms, right? Like, someone has to bring it to their attention that it's available for sale, and the process involved and the steps needed and how it gets done. Like, it's not going to magically sell itself.
Right. And if you look at the current markets that you would never think things would sell for automatically, like cars, like whoever thought 25 years ago that you could buy a car online without test driving it, or a pair of shoes, or your clothes, or even houses. People are buying houses online without even doing a walkthrough. The reason why is that those assets have become commoditized. It's like, okay, it's a 3-bedroom, 2-bathroom house. It's in this neighborhood. The house across the street sold for this price, so I know I'm getting a fair price. It has these appliances, so it's pretty easy to evaluate. In a domain name, it's a little bit different because it's a unique asset. It's a unique asset. It's a unique identity. There's only one of them. Now, I know in the blockchain situation, you could have duplicates and stuff, so that's a whole different it's a whole different scenario, but it's also, some of that's going to have to flush itself out. To have two of the same extensions, that are exactly the same is not going to work over time. So, but in the real domain world, in this domain world anyway, every domain name is unique. You can't duplicate it. There's only one of them. Now you can get the same keyword in another extension, of course, and those extensions have value too, but it's just like having 800 numbers and then 888, then 877, 866, 855. There's 20 toll-free numbers now because the original 800 number ran out of vanity space. So they had to come up with other extensions. So that's what the domain industry has done. They've come out with other extensions. It doesn't mean that one may not be better than the other, depending on how that other user uses their 866 toll-free number compared to the 800 number. But the original number was 800, just like the original extension was .com. These things are not, you could just go out and, when you go out and automatically register a domain name, it's available. It's a different story. But if you want to try to resell that asset, given it has a unique character, character set, that it might be in multiple industries, it might have multiple meanings. Those types of things are better to be defined by someone representing you.
What I've noticed from my research about the domain industry is, if you look at the big sales, and by big I'm saying 7 figures, what's amazing is that buyers tend to be across the board. It's not just big companies. It could be a Fortune 500 company. It could be a startup. It could be a medium-sized company. And I think that's what makes it hard, right? the potential universe of buyers is pretty big for premium names.
That's true. And there's potential buyers that you may have never even been able to contact that might have paid more. I mean, that's the nature of the business. That happens in physical real estate too. So, but the more the market matures, the more that we're in it, obviously the expansion of that buying network increases. So you have venture capital companies and SPAC companies buying domain names and renaming what's initially what was going to be their brand and identity. Um, so there's several examples, but a good buddy of mine, I helped him get the domain name boatloans.com. He's been trying for 7 years. I've been trying to get him this name for 7 years, and he's actually a good friend of mine. He owned boatloan.com, singular, and he owned boatloans.net, but he didn't have boatloans.com. And he was in this sales process with an end user buyer for his business. And as soon as he secured boatloans.com, his business sold. Now he doesn't credit it all to of course, the domain name, because he did tremendous amount of boat loan business online. He was like one of the leading boat loan businesses in the entire country. But the company that was buying him, that was paying over $100 million for his business, wasn't completely okay with everything until he got that boatloans.com, and he had his bases covered in just about every domain name and extension he had. But the most important one was the plural version of his business in .com in this particular example, and his business sold, within 30 days after he acquired that name. And so that's the example. That's a perfect example of, you never know how much more that domain name, whatever extension is, means to someone else that might be an impactful part of your business currently or in the future, whether it's an end user buyer for your entire business or for that particular domain name, in general.
Monty, how would you describe the difference between a 7-figure domain and, say, like a 5 or 6-figure domain?
Well, 7-figure domain names generally have multiple. With there are a few exceptions, and somebody would pay a 7-figure domain, amount of money for a domain name without the following qualifications. But a 7-figure domain name probably has it's short, has a dictionary term or meaning. It has natural type in traffic. It's easy to remember. It's easy to spell. It has presence. It has good PPC value. That means people are paying money for that particular search term. So it has multiple aspects to it that not only can gain appreciation through, making it even better over time through development, but also can save money through not having to buy that particular keyword because you own the domain name through online SEM work and advertising and spending money from that. So rebranding something that's more to the point, that's spelled properly, that's one word instead of 2 words, that shortens things up, that has a better extension for their particular business. That's what qualifies. That's what makes the difference between those two. 5-figure names, you can see some single word domain names selling in the 5 figures, of course. But generally, the 5-figure names are more than one word. They might have a Z instead of an S. It might be an urban dictionary term instead of a real dictionary term, things like that. It might be harder to spell. It might be a little bit longer than necessary because of that, but still has good meaning and good traffic and that kind of stuff. But that's where I would say the differences are.
So just expanding on that a bit further, would you say a name like fuel.com that could be used for anything is more valuable than, say, something like insurance.com, which has a very specific purpose?
So I've had this question, I think, before. So insurance.com is a huge name, obviously, because it covers the entire insurance industry in multiple aspects. But having something more defined, you might even say that carinsurance.com could be more valuable for a car insurance company than insurance.com, obviously, for that particular buyer. So that's the reverse of this scenario, is that something that's longer, that has an added word, might become more valuable because it's more defined and more relevant to a particular segment of the industry, which could be also very big and very huge for, the economy. So in the case of fuel, which of course can be used for multiple things, You can say, fuel my business with funding, or fuel could be the original meaning of fuel, which is to, power, a vehicle or some kind of, motorized vehicle, or, fuel is is something that powers something. So, in this case, I would think fuel could have more value than the word insurance, but insurance is at the top tier of the insurance industry. So it's a hard call. Fuel has more play, has more application in different industries than insurance does. If you're Geico or State Farm, or one of those huge insurance conglomerates, insurance makes total sense to me by owning it. Not even if you're going to brand yourself that, but owning it, getting all that intrinsic value through traffic, through saying what you are, doing what you do every day. By not owning insurance, and you're in the insurance business like that, and you cover home, life, vehicle, car, all that stuff, not owning insurance.com, is pretty, that's a good reason to own that. State Farm's not going to buy fuel.com, probably. So that's, kind of the difference.
Great points. My last question before handing it back to my co-host and opening it up for questions is, if you're early in an industry like you were in the 90s and you're building a portfolio, and there's a lot of unknowns and uncertainties, but you have conviction, you have vision, what is the best portfolio building strategy? Like, do you want to focus on a variety of types of names to hedge your bets, or do you want to just focus on one or two types of names?
Well, I dealt with this a lot too with my clients. So I had clients that owned a variety of different keywords and across multiple industries, which is a good risk adverse play. It's a good way to spread your assets and spread your risk across multiple industries. And then I had clients that owned portfolio names that were all related to each other. The ones that are related to each other is a harder play, in my opinion, over time, because you still need that specific buyer that not only wants to buy one name, but buy many names in that particular portfolio that are related. And that's always a harder sale, and you never get the value for all the other names that you're using in that particular field. And again, the carrying costs, a lot of people don't look at the carrying costs, but let's say I had let's say I had every kind of insurance name covered. So I had insurance.com and car insurance, health insurance, all these different insurance names. You're very limited to the insurance buyer, obviously. And then you have all the carrying costs to renew all those particular domain names if you're the buyer as well. And of course, as the one that owns it, you have to have all that carrying costs as well to renew them every year. It doesn't seem like it's a big deal, but it is a big deal when you own 1,000 names. 1,000 names at $10 every year, it adds up. And if you're not monetizing, selling, and if you're dead set on selling the portfolio by itself, and you don't want to break up the portfolio, you're going to be stuck with the portfolio and renewing those portfolio names for as long until somebody comes on and wanting to buy the whole portfolio, which is more rare than somebody buying, 5 or 6 keyword names that are spread across your portfolio that has good, depth and breadth of keyword in multiple industries, where you can focus on, having multiple buyers looking at multiple different names in multiple different categories. So I think that's a better play, if that was the question you asked me.
Yes, absolutely. Thank you so much. I'll hand it over to my co-host. I think he may have stepped out. Let's see. Let's bring up people that have any questions. And while we do that, Monty, is there any additional advice you would give us that we may have left out in terms of when you're in a new industry?
You mean in a new industry looking to buy names?
Yes, looking to build their portfolio, and also just navigating.
Hello.
Yeah. Can you hear me, Monty?
Yeah, can you repeat that? It blipped
Oh,
out for a little bit.
sorry. I was saying that any advice for people when you're in a new industry and there's a lot of uncertainties, but you have conviction, how to navigate that, like both in terms of buying and in terms of selling?
So the best, my best advice is, if you're on a limited budget, don't go, just don't go all in because you have conviction or a vision. Do it with a percentage of your portfolio, of your portfolio assets. If you're going to make a new investment that could be risky, take a percentage, whatever that percentage you feel comfortable with. It could be 10% of your asset value or your cash value that you have, and start investing, slowly, like I did when there was no other factors to buy. I put 150,000 into domain names back in 1995, let's call it, buying 2,000 domain names at once. And then, you have to renew that. So that's another $150,000 if you don't sell anything, and then another $150,000 if you don't sell anything. And of course, your tendency is always to keep buying because you think you're missing out. Again, that FOMO factor, and then you keep buying more. What you don't want to get is underfunded or upside down on your investment strategy without having any return on that investment. So my advice is to start off with a percentage of assets, of value, and take it smart and slow, and then get that return on that original investment, or show that you have a way to get that return back if you get a couple sales and you're on the right path before you start investing more, instead of going all in and taking that gamble and that risk, or playing the lottery, because so many people end up upside down and they're having to liquidate their portfolios at basically less than what they bought it for, or at cost, or even not being able to liquidate and going under as a result. So be smart, diligent, get your money back and play with the house's money for the rest of the investments over time. That's what I did in crypto, for example, and I took all my profits out of crypto, and now everything that's in it, no matter if I lost 100% of what I have now, I know that I got my money out plus a little bit of a return, and then I can't look at myself and say, hey, I lost everything, because I got something back out. So I would do the same philosophy for domain names and blockchain names, and NFTs, or anything for that matter.
Yeah, I would add to that that I think it's very important to give yourself some time to understand what are valuable names to acquire, right? Like too often I see people just spend all of their money, like whatever the money they have, they immediately it goes all into ENS. Um, I think there's a learning curve, right? And it takes time to know, um, to figure out the game. And you don't want to fire all of your shots at once, right? Like they say, first fire bullets, then cannonballs. As you go up the curve, then yeah, you can scale your spending, but don't spend everything too soon, too quickly, until like if you've already had sales, if you've already flipped names for profit, if you're already on that curve, great, keep scaling it up. But if all you've been doing is buying, hoping that sometime in the future someone will pay more, there's not that clarity on if you've acquired good names.
Exactly. And then another piece of advice, which I wasn't very good at, and that is, develop some. So, if you're, back in the old days, again, when I initially bought domain names, building a website was so hard. There was no template driven websites. You had to hire a website developer, and then, they were in completely different languages than they are today. So we were dealing with Cobalt and, what was before PHP. I can't remember the name of it, but, archaic coding systems. And so they weren't template driven. And then you had reliance on internet connectivity. And when I first bought names, there wasn't credit card transactions online. They were those secured socket layers. So the industry's evolved quite a bit since then. Much of which is thanks to the adult industry. They're the ones that kind of allowed us all to be able to transmit credit card transactions online and having SSL. And now it's a standard in the industry. But now is a good time, given how easy it is to, put up a website and try to monetize stuff and play with that. Is that, have a diverse portfolio strategy even within your domain names by developing some. There's nothing wrong with holding raw land as long as that raw land appreciates over time and there's a buyer for it. But but it also makes sense to put something up on some of that land, and have it monetized, have it being paying rent back to you, have it being paid the licensing fees, have it generate sales in terms of selling products and services. If you bought a piece of property, how long would you let that piece of property just sit there undeveloped and paying taxes or paying your mortgage without doing something with it, hoping that some buyer is going to come and want to buy it someday? That's not such a smart play anymore. I think that you need to really, look at website development or developing products and services on your ENS domain names. For us, when I bought with my partners .hip hop, the one good advantage is that it was ENS enabled. So we're going to do some really cool stuff with our .hip hop extension for the music industry and for the hip hop industry. And so it gives us a double edged sword in a positive way, that we're not only have Web 2 application, but we're going to have Web 3 application on this domain extension and be able to do some really cool stuff through tokenization of music and art and, letting downloads come through, coins and tokens and spread across the world that way through monetization. So, those are some of the additional advice.
I see Web3 has had his hand up. Go ahead, Web3.
Hey everybody, I'm GM. Thank you ENS Academy for hosting the space. Thank you Monty for being here. Also thank you Saiger. I see that you changed your name. .eth all the way, man. I just wanted to kind of add to the point that you were saying, Monty, around like a minute ago, which is how much more valuable would a name be, or I guess you'd say, ENS name be, if we actually were able to build upon it, or to be able to rent it out. I think that's really important, and we're kind of trying to really drive that in the space as well. I do partly UI work and things like that, so if anything, I see that a lot of people are actually building on top of their ENS names, because they see that even though somebody may want it for just like you said, the raw land itself, others are seeing further into that and actually are noticing that, hey, if we are able to build on top of these things with the IPFS, that we can actually have more value. And so I think that was a very good point. I think that's something that we should all consider really as we look into this into the future. But thank you.
Yeah, for sure. So this is a complete flashback for me to 1995, 1996, is that when I invested in these domain names, there was no real website development. And so now that there's website development, what does that do for everybody? It even if you are holding raw land, even if you're holding just the domain name still, the fact that somebody can buy a name and then develop it fairly easy makes the name more valuable. And I think that's what's happening with ENS as well. Everybody initially is like, oh, you can't build. It's just to be used to transfer money back and forth, or your coins back and forth, and your transactions. But when people start developing and building upon your ENS names or your blockchain names in general, it makes all the plain ENS domain name owners names more valuable, because now there's capability that somebody who buys it could develop it. So I know that was the initial hurdle to begin with, and I know it's still a hurdle today in ENS and in some of the other blockchain names, but it's going to happen. You're going to be able to build on it. Hopefully more browsers will be able to see it. There'll be blockchain browsers that you'll start using, and you'll see true application, and that will increase the value of these extensions over time, just like it did for domain names. It's like a complete flashback for me from 25 years ago. And that's what's happening today in the ENS NFT world.
Wow. Amazing to imagine what's ahead of us. I see we have another question from SE4N. Please go ahead.
Yeah, hi. Thanks for hosting the space. And Monty, thanks for all the insight. I wanted to ask you what you think, or what your thoughts are on domains in other languages and also geodomains, if you don't mind.
Sure. So I assume you're talking about, when you say other languages, are you talking about IDNs?
Sorry, no, I'm talking about ENS domains in Hindi or Chinese or Spanish or something like that.
Right. So I really don't have an opinion on that, because I'm not really an expert on the ENS, other language names. I can compare it a little bit to IDNs, which are internationalized domain names, which never really kind of took off. So, flashback to, again, 15, 20 years ago, because of the characters in Arabic letters and Hebrew letters and Chinese letters. They came out with something called IDNs, which are internationalized domain names in .com and .net and other extensions. And it was based off of a punny code, which was a alphanumeric code that translated onto a keyboard, or vice versa, off the keyboard into that particular domain name in the international word, in that foreign language word. So obviously, it applies to some people. It does apply. There's lots of them registered, but nothing in comparison to English letter domain names that then say the Chinese variation of that particular word. There hasn't been any big transactions in terms of the aftermarket with those internationalized domain names either. I don't know what happens with the ENS side of that. So I'm not sure how that will work. I think there's an adoption curve that you have to get this back, get this popular through the traditional way that you would be speaking to each other, talking to each other in what normally is a English alphabet society first, before you start applying that internationalized and foreign language stuff to the blockchain. But I don't know that for a fact. There's probably people on this Twitter space mechanism that on this session that know more than I do. Regarding geodomain names, I've dealt with those for many years, sold tons of them, and helped clients buy them. And they're obviously very valuable, but they're, again, limited to that geo space. So, one of my clients has Atlanta.com. And, Atlanta is a great big city and very specialized for that. But, if you're in California, you're not going to buy Atlanta.com, and you're only going to visit Atlanta.com if you're coming to Atlanta.com to look for, what's happening at Atlanta.com. It's extremely valuable as a specific geo space, a geo name in that particular space, for regular domain names. And a lot of those names are valuable because of the market they serve. MyrtleBeach.com, for example, because it's a tourist attraction that sold for $4.5 million about 7-8 years ago. Most of those names sell for high five into the mid six figures. The geospace names in the DNS Web 2 space. In terms of Web 3 and ENS, I don't know how to estimate the value of that yet, because I don't know how it applies to commerce or to usage.
Great, thank you so much. I really appreciate it. I guess the other question, which is more just I don't know, whatever you might see out there, is I think the history of .com and Web 2 is so much focused on commercial, but of course a big part of what's talked about in crypto is identity and that sort of thing. So I was curious if you see, I don't know, whatever your thoughts are on people grabbing like a subdomain off of a area code or a location or something like that for identity purposes. And just if you have any thoughts about that. Thanks so much.
Yeah, so traditionally .com started off as commercial for generating profit, but it morphed into identity. Like it morphed into owning your name, your last name, your first name, your favorite club or your favorite town, your favorite sport team, stuff like that. Just because com became synonymous with just being on the web. So through the years, com, where most people don't know what com stands for. Most people just use it as their online presence and identity, more so than they use it for the true definition of generating commercial funds from what they do. So probably the majority of the names that are used are not in use. I mean, that are registered are not in use, are sitting there as raw real estate, or as are being used as their mom and pop identity, their family name, that kind of stuff. So it's being used as an identity. Subdomains are, even, again, that's kind of like going back to the IDN thing. To generate a subdomain off of the real domain, there's been successful plays in that in the marketplace, but I truly believe that focusing on the direct match end user, direct match keyword domain name, or ETH name, or whatever that you want to put your product service identity on, is more important than trying to generate subdomains off of a string. Given how many strings there are, and then in the blockchain world, there's going to be probably more strings than there are in the Web 2 space. So it will become even more of a confusing space by creating subdomain names off of ETH names or blockchain names without having the direct correlation to that end user name. But again, I'm not educated enough in the blockchain space to be able to predict that at all.
Any other questions from the audience before we wrap up the session? Okay, well, right, we're a few minutes. Oh, go ahead.
Oh, yes, I did have another question real quick, because I did miss actually the beginning part of the space. I wanted to know, Monty, what was it initially about .com? What was that light bulb moment for you when you're like, oh my gosh, this is the next big thing?
Yeah, so in the beginning of the show, the beginning of the show, I explained how I got into it. So when I read a thesis paper from a customer's son that he wrote for college about how domain names were like real estate. It was just based on that. And then when I read that thesis paper, they wanted me to read it as a friend and give my feedback. But when I read that thesis paper, the light bulb for me anyway went off, and I saw the real estate play immediately in the virtual space, like in the digital space. And thinking digitally back then, was pretty ironic for me, because I was never on the web. So I wasn't even familiar with the web. I mean, we communicated by email with my company, and we had a website and everything, but it was, again, pretty archaic back in the mid 90s. But I saw it as an expansion of physical real estate into the digital world, or the virtual world. And that's what clicked for me anyway. And I wasn't a computer nerd. I didn't go to school for anything like that. It just was something that connected with me initially. And then I went all in. It was like my second job. When I was selling medical equipment during the day, I was up all freaking night registering domain names and doing research. I mean, I got a couple hours of sleep every day. I was really into it. And and then it kind of evolved over time. It had its ups and downs. It had its questionable of whether it was going to exist forever, especially in 1999, 2000. But then after that, really a major test point in the universe of our of online presence. Then I knew that it was going to be successful and that it was here to stay. And I think we're in that chasm right now with blockchain and with NFTs, and the same thing is that it's becoming popular amongst the innovators and the speculators and the people that are seeing the vision and are doing it now. But the outside world is going, that'll never last. That won't make it. Look already. These companies are going out of business. Look what happened to Bitcoin and its value and all this stuff. But this is all part of the natural foundation process, establishing a foundation of value and testing the waters and making sure that there's enough people that believe in it, that it survives, which there is. And so same with the domain name world. That's what happened. And that's what's going to be happening with, blockchain and crypto to begin, as a whole going forward.
Well, with that, I want to really thank everyone, and especially thank Monty for sharing, 2.5 decades of experience from the domain industry. I know I learned a lot, and I hope everybody else also learned in this episode. As a reminder, all of our episodes are going to be uploaded on iTunes and Spotify, including this one once we have everything ready. Already, I think there's several episodes available, and yeah, great session today, guys. Thanks for everyone.
So one thing I want to mention and just remind everybody is that the NamesCon conference is coming up on August 31st through September 3rd in Austin. It's a great conference to attend. I don't have a play in the conference other than we're putting on the domain auction. But for those of you that really want to learn more about the domain name industry, the Web 2 side, and see the opportunities there for investment, it's a great conference to go to. I think you go to namescon.com or namescon.global to get more information and register for that conference. It's going to be a live conference in Austin, Texas. And we're doing the premier and premium domain name auction on August 30th with a live auctioneer. On September 1st, a live auctioneer, and pre-bidding has already opened up for a lot of the premium domain names at rotd.hibid.com. That's rotd.hibid.com. And you can get a lot more information at rotd.com.
And just for context, I believe NamesCon is the largest domain conference, correct?
That is the largest domain conference today.
Well, with that, thanks once again, everyone, and look forward to seeing you guys at the next episode.
Thank you so much for having me.
Hey guys, did James drop off?